Welcome to the first of 3 presentations regarding contributions to retirement. The first one we're going to do in this session is the Retirement Savings Contribution Credit. Now, on your intake interview form, you'll see a box, Contributions to a Retirement Account. And you'll see IRA, 401k, and a Roth IRA. Again, the one we're going to be dealing with today is the one they're referring to as the 401k, the Retirement Savings Contribution Credit. So if the client answers that, you can explore that with them. Make sure they put it in the right box. Usually a taxpayer will know that. Actually, most of our clients are already retired, so you may not see a lot of this particular item. Again, it may not show on a tax document, but we'll go over some of that in a moment here. But you typically have to go by if they mark this as a yes to explore this further. If they're on Social Security and pensions, they're not going to be contributing to a retirement account. Again, the one we're going to talk about in this session is payroll contributions. And they typically are shown on a W-2. And TaxSlayer will automatically process them for this credit without your intervention, as long as you fill in the right boxes. Now, traditional IRA contributions, if they contribute directly to an IRA account, that's what we're going to cover in our second session. And those items will appear in the TaxSlayer adjustment section. We'll cover them again in the second session, but just a quick note, a traditional IRA contribution can also qualify for the retirement savings credit that we're going to talk about here if they meet the income limitations. And then the third one is the Roth IRA contribution. They can be entered in the credit section, again, mainly to see if they qualify for the retirement savings credit, contribution credit, which is what we're talking about today. That'll be on our third session. So we'll move along and stick with our focus here. Here are your annual limits that you can put into these accounts for 2018. The thing to note is that the Roth IRA and the IRA limits are calculated together. You can't put $5,500 into both accounts. You can only put a total of $5,500 in those two accounts, or $6,500. Now, your spouse can have both of those accounts as well, so the taxpayer and the spouse can both have $5,500 or $6,500. The 401k is much more generous. Probably many of you perhaps took advantage of that in your working career. Okay, going back to if you as an employee contribute to a retirement plan, typically on the W-2, there'll be an entry in block 12 which will indicate that, and that will generate what's called a Form 8880, and that automatically will be taken care of for you. Now, if the entry is in block 14 instead of 12, there's a little bit of extra work, but it still can work for you, and we'll show you that in a moment. one thing about the contribution, it has to be voluntary. One of the problems we had, the Pennsylvania State Employee Retirement System, you'll find that in Block 14, actually, of the W-2, but that is not a voluntary program. So that retirement contribution does not count for this credit. Again, it has to be voluntary. And this credit takes the form of a reduction of the income tax that is calculated. If no tax is calculated, there's no credit. So sometimes you might go back there and say, why don't they have a savings credit? They don't have it because they don't owe any tax. Okay, here's a sample of a W-2. Notice we have in Block 12, we have a D, which indicates a 401k, and we have a $2,000 amount. That's supported in Box 13. We have an X, which indicates they are part of a retirement plan. Nothing in Box 14. So this entry, and we'll show that in a minute in TaxSlayer, will automatically generate the Form 8880. Again, we talked about if it's in Box 14, we'll look at that in a moment here. So Box 12, the valid codes are D, which is a 401k, E is a 403b, and G, I think, is a Form 457 Plan 457, and the double letters are the Roth versions of D, E, and G. Now, these are Roth plans that the employer provides. These are not plans where the individual is directly contributing to a Roth IRA on their own. These are part of an employer's plan. So that's why you'll find them on a W-2. So you put those codes in D, and again in Box 13 you typically will mark retirement plan, put an X in there. Now, Box 14 is a little bit different. There's a drop-down menu, and it looks like this. And there are two entries here. One, again, if it's voluntary, you'd click this one to carry to an 8880. If it's not a qualifying plan, then you click this entry. Now here's what the TaxSlayer screen looks like for a W-2. You can put in your D, put in your $2,000 amount, and click on your retirement plan. By making those two entries there, that will create the 8880 for the taxpayer. Now, if you want to go look at the 8880, you go to, in the federal section, you go to Deductions, Credits, Retirement Savings Credit, Form 8880, and you'll see the $2,000 that we put on the W-2 automatically carries there for the calculation. The only reason you would go here is if you want, if the taxpayer had any distributions from retirement on a Form 1099-R. The IRS says if you're contributing to a retirement plan and withdrawing at the same time, that's not kosher, and generally you'll lose the retirement savings credit if you're withdrawing and depositing at the same time. sometimes you find that the taxpayer inadvertently, they didn't do that deliberately, but maybe they got laid off for one job. That job forced them to take all their money in their retirement plan out, and they get a 1099-R for that. Meanwhile, they get a new job and start making retirement contributions to the new job, not realizing that that distribution from the retirement kind of knocks them out of this credit. It also is taxable income to them as well. Okay. So if you consider distributions, you can ignore these kind of distributions on the 8880. If it's one of these, you don't have to add it in that blocks. Now, there are income limits to qualify for the retirement savings contribution credit. As you can see, the most you can get is a reduction in your tax of 50% of the contribution. And in that case, your adjusted gross income, if you're married filing jointly, has to be under $37,000. If you're single, it has to be less than $18,500. So the limits are pretty low here. So you might, that's another reason you might not see this credit as often, because they may have more income than that. Although it is declining. At $40,000, they can still get 10% of their contribution. And here's what it looks like. It's actually, apologize, I had to use last year's form, but it appears on line 51, and in the new form, it'll be on Schedule 3, line 51. It stays on line 51, it just moves to Schedule 3. And as we said at the beginning, although typically you see this on retirement, employer-provided retirement savings plans, they can also, taxpayer can also get the savings contribution credit for an IRA contribution or a Roth IRA contribution if they meet the income limitations. And that's the end of Part 1. We'll move on to IRA deductions in our next section.